The most anticipated report of the earnings season is coming out here in just a couple of days. That is Nvidia, stock symbol NVDA. Now, this has a lot of hype baked into the stock. If you were to look at it from a option standpoint, you're trying to play a straddle where you're essentially buying calls and puts at the same strike price, hoping that you can capture a big move. You need a 16.6% move just to break even on that options trading strategy. That is the kind of premium that is being baked into these option plays. But when you look at the NVIDIA history, it tells a much different story. Yes, there has been some phenomenal moves out of the earnings reports that we have seen of late. Last earnings report, we saw a 9.3% move. Now, historically, it has an 8.1% move. But now we're expecting twice that much based off of the options premiums. And if you just buy the one side of it, yeah, you might still make money off of it. If you look at it from a historical standpoint, it's done a great job of beating and gapping significantly higher the next day. However, you're not protecting yourself in the process. And let's talk about some expectations before we get to the charts here. You're talking about a $3.1 trillion stock, and we're looking at a 16.6% move just to break even. That would require for the company to see its market cap increase from 3.1 trillion to 3,625 billion in market cap. That is a massive move that would easily make it by over $400 billion bigger than Apple is. And what does a $500+ billion move look like? It's bigger than every company's market cap on the S&P 500, except for 11 other companies not named Nvidia. That means a $500 billion plus move is like adding a Visa to the company's market cap, or a MasterCard, or a Costco, or a Home Depot. That is how big of a move we're talking about here within the blink of an eye. Or take Oracle, or Bank of America, or Johnson & Johnson, or Procter & Gamble. Those are the kinds of moves that people are expecting to the upside with NVIDIA, which would take the stock's price. Let's just look at it here a second, because I actually have to move this chart up just to get to this level. We're talking about a move up to this 147 level. If we're talking about just breaking even on an option straddle, if you were just to buy one call and one put to straddle this stock going into earnings, it would cost you $1,400. And to break even, you would have to see a move all the way up to $147 a share. That right there is a huge move. Now, of course, there's the potential for the downside too. So what does a 16% move look like to the downside? You're talking about a move from 3.1 trillion to a little over 2.5 trillion. Still a very big move, still over $500 billion. And that's going to take you down to this $105 mark. So you can get all the way back down to this level. Does that seem possible? Yeah. I mean, especially when you consider how much it's just run over the last 3 weeks. I could see it being possible. I could see that happening. But these are moves that are twice what we have seen from its normal average of 8.1%. We only saw a 9.3% move following its earnings report. So I do think that people were way off sides on the expectations for NVIDIA going into earnings. More than likely, I would say that you're not going to get a 16% move. And just looking at it from a PE standpoint, this is a stock that already has a 74 PE. You see a 16% move out of it, that is more than likely going to increase that PE ratio. Now you take some of its competitors like Taiwan Semiconductor, it has a PE ratio of 29. Or Texas Instruments has a PE ratio of 36. Even for them, that's historically overvalued. Maybe one of the comparables is Broadcom, AVGO, has a price to earnings ratio of 68. Either way, in order to really make money off of our options, we need a massive move out of the NVIDIA earnings. Now, one of my own personal philosophies is to not play earnings. I don't play earnings at all. I'm like, nope. I will sell every one of my swing trades that I have before an earnings report. That's different than long-term or dividend trading. But for my swing trading, I do not hold a stock through earnings. Now, let's see what the charts have to say here. First of all, so many of the support and resistance levels of the past 3 weeks have just been obliterated with this move off of the lows from almost $90. This huge move here just completely crushed all the resistance levels. It did find some support, which I think is probably the most interesting level, and probably the level that I would be paying close attention to if we do get a heavy sell-off from this earnings report, would be its year-to-date VWAP. Now look at right here. Back in April, it pulled back to the VWAP and it bounced. Back in August, it pulled back to it again and bounced yet once more. So if we do get a significant sell-off, and this would be pretty huge. I mean, this would wipe out the entire move from the last 3 weeks. And I'm not expecting this necessarily, but it did. If we did start to get on that path after the earnings report and then we saw further selling in the days and weeks that followed, this would be the level that I would be watching for as a potential bounce play. Overhead, you had this declining resistance right here, and the stock managed to break above it quite nicely. But since breaking above it right here, it has struggled to hold this level. You had the break below it on 822, and then it bounced right back above it, and then it's managed to sell off yet again today and sell off for the third time in the last 5 days, but it's still holding this price level. So the 10-day moving average, that's kicking in, trying to act as some support. It's trying to hold this declining trend line. If we didn't have earnings on Wednesday, and I'm not going to play the earnings report, this could make for a very nice trade setup here as a swing trade. I'm not going to play it just because it's too high a risk for me, but just seeing how it has been consolidating very nicely, creating a clear level of short-term resistance that if it could break back above the highs from today, get back above 131.26, it does set up as a nice short-term move, but because there's earnings on Wednesday, it's a no-go for me. You also have what might be a little bit of a moderation of this rising trend line going back to early August. I don't think there's much of a trend line to get excited about just yet. What I would prefer to see is a little bit more of a pullback that can create a higher low. I don't necessarily think that that's a higher low yet, and I definitely don't think that's one. So we don't really have the higher low yet, but what we do have is where price is just sticking to these lower candle wicks where it's testing it and it's bouncing off of it. So far and going forward, I would be watching that, but if it breaks down below it, that's where you want to start looking for that higher low to start to get formed. Another thing you want to remember that we've seen a lot this particular earnings period, and that is good earnings reports getting sold. We've seen a lot of companies beat, but that has not necessarily translated to higher stock prices. With a move like what we've seen over the last 3 weeks, there's a very good chance that what we could end up seeing is a sell-off, even though the company reports good earnings. I do think that the CEO from Nvidia likes to hype his earnings a lot and likes to tell a really good story, and that can get people really hyped up about the stock, and he wants to paint a really rosy picture for the company. And so that plays to his benefit. People want to hear good news out of Nvidia because people are so loaded up on the stock. In the end, I wish I could tell you whether it's going to go up or down. There's a lot of people that'll tell you what it's going to do, and they really have no clue. I'm just here to tell you what I know, without sugarcoating anything for you. Earnings is a very dangerous thing. Earnings can wipe out a portfolio. Playing earnings with options, not knowing what you're doing, can even more assuredly assume that you're going to ruin your portfolio. So there's nothing wrong with staying out of the Nvidia earnings. Just because other people are playing it or just because everybody's doing it doesn't mean that you have to. Remember when your mom used to say that to you? Same applies here with Nvidia. Don't get caught up into the hype. If they blow out earnings and they just have an incredible reaction to the upside and they move 20%, fine. Tip your hat and go on to the next trade. But you don't have to chase after it. If you enjoyed this video, I would encourage you to like and subscribe and let me know down in the comments below. Are you going to play the Nvidia earnings? What are your plans? What do you think of the stock right now? Do you think it's a buy, a sell? Tell me down in the comments below. We can discuss it out. Thank you guys, and God bless.